about Fusion and all of its possibilities. So if you have more questions, you can always head out to the experience zone after the sessions to find out more. And moving on, our next speaker, ladies and gentlemen, Mohit Chhatrapati, believes that to succeed, you need to be passionate and you must be able to demonstrate your interest. As an ex-investment banker, Mohit is currently lead corporate development, M&A, South Asia at MasterCard. So ladies and gentlemen, please put your hands together for Mohit.
Is the slides up? Yeah. Okay. Perfect. Good evening, everyone. It's a pleasure to be here, and thank you to Bhavin, Murli, and the Zeta team for inviting us and being able to give you a little bit of a sneak peek into how we at MasterCard think about building partnerships for the future. Across the world, we are actively engaging with innovative companies like Zeta, like many of you are here in the audience, as well as their investors who play an important role in scaling these companies, as well as our customers and our ecosystem of partners, whether they're banks, merchants, government organizations, or corporations. So as we sort of dive into this, what I first wanted to at least share with you is how we think about the word partnerships. I think most people would agree that to scale in financial services, it's important to partner, unlike most other industries. And we have a pretty simple mantra at MasterCard. If we can deliver scale for innovative companies, and also create acceleration for incumbents. And you could put MasterCard in that category, some people do, the banks maybe, whoever else. What happens is we can create powerful results together. And to me, in order to be successful in fintech, I think the word disintermediation is sort of ruled out by most people. And really it's about bringing novel technology to market by partnering with the right people who see that opportunity. And that's sort of what we are trying to drive within MasterCard by partnering with our ecosystem. So a lot of times we get the question, so how are we really helping and what can MasterCard do? And I'll share a few examples of companies here in India that we have been actively engaging with. And each partnership is bespoke, is custom. It may be an early stage company, it could be a much more scaled data stage company. But if I were to summarize, there are probably 5 things that I could bucket them into. So one would be creating an integrated or a bundled offering. MasterCard today has a plethora of products and services across various business lines that we are actively looking to integrate with innovative companies, as well as bundle together to jointly go to market. You know, an example of that would be a company called Citizen, who is a technology provider in the Aadhaar ecosystem. And they provide eKYC and onboarding services. We as MasterCard are a licensed entity into the Aadhaar database. And to grow that role and to partner with them, we're jointly bundling our offering and selling it to banks, to government organizations, etc. Selling to banks, right? Bringing me to the next point. Not just banks, but even merchants, corporates, and governments. MasterCard has the ability to open doors quickly. And that's something we are actively working on to have several of our partnerships. You know, example would be a company called Fluid AI, headquartered in Mumbai. They use AI technologies to be able to mine banking data and create innovative insights. So we're helping them sort of open doors on that front. Navigating the regulatory environment, this came up as a consistent theme in the couple panels and discussions previously. We've got experts at this internally, licensing, certification, trying to fast track really the ability to get to market. Exploring new economic models, and I think this is one where we often get a lot of good, interesting dialogue on how we can shift the status quo. And we're very much open to evaluating new ways to do the business we do as well as your own business. And then international expansion. I think that's a given. given our brand and presence across every major country across the world. A company called SignZ, we've been partnering and really helping them scale in markets in the Middle East, in Europe, in the US as well. Bringing this home a little bit, and I think sharing a bit of what our plans are for India, and some of you may have seen this, we made a commitment to invest about $1 billion in India over the next 5 years. And among other things, I would sort of bucket them into 4 broad categories. One is bringing a node of our technology on soil here in India to comply with the government regulations. But what it does is give us an ability to execute with a localized approach. The second one, which is quite interesting, is building a services hub. So we're actively building our capabilities, leveraging cutting-edge technologies around data services, cyber intelligence, tokenization. And in fact, today, MasterCard's revenue is about 35% or so odd of our revenues come from non-payments and services business, which we're looking to scale. Partnerships, which is obviously the theme of this discussion, that's where we're going to invest a lot of time and effort in fintech companies, with governments, with investors and corporates. And then is our workforce. So today, about 14% of our global workforce is based here in India. We've got 2 technology hubs, one in Pune, one in Baroda, and 3 offices in Bombay, Bangalore, and Delhi. I think this is most people here would probably know this and agree, but I think I actually was quite impressed seeing this slide and seeing how high up India is. When you look at digitally active consumers and the adoption of fintech, we're about 87% of India's digitally active consumers are adopting fintech, very close behind China. But what's interesting is you see how far down the list somewhere like a US or a Canada is, somewhere around the 45 to 50%. And in fact, I think in the first half of this year, we've outperformed China in terms of fintech investments coming. So clearly, I think we're still at the early stage and the cusp of growth, but a very interesting market to see how it evolves over time. We have been already pretty active in India, and I think this has been over the last probably 3 or 4 years. Proud to say Zeta was actually part of our Start Path program back in 2017. And we were able to launch one of their first prepaid cards with RBL Bank. And you see probably a lot of other names you may recognize that span between acceptance to lending to credit scoring to merchant onboarding, KYC, B2B payments, expense management. And these sort of partnerships could be, again, like I mentioned, early stage companies, as well as they scale over time, even growth and larger late stage companies. And I'll talk to a little bit more about how we look at these spaces and pick some of these companies. To put that a little bit more in structure, right? We try to partner across kind of 3 buckets. When we say early stage, what we really mean is when you're in build mode. We're trying to partner with seed to Series A stage companies, really around testing and learning, getting product market fit, helping you engage with some of our own products and bringing those in front of customers to get some early learnings. We have a program called Start Path that is a global program, and we create sort of bespoke 6-month engagements to open up our own capabilities, our people, our customers to young companies. And many of the companies that were on the previous slide have come to us through that program. When you get into sort of scale mode, we're talking here about companies probably Series A to Series B or C, where there is already revenue generating customers, and now it's time to really scale. And there we look to drive business partnerships between us and these companies, and then we use investments as a glue, writing sort of checks somewhere around 1 to 3 million. What we've done for that is launch something called an India Investment Fund. So we sort of specifically called out capital on our balance sheet to deploy and sort of a structure to be able to evaluate companies and quickly make decisions. And then the last one is sort of differentiation. And this would be typical sort of corporate development M&A as we get into later stage companies, probably Series C and above, very much focused on synergies and trying to sort of build and grow our strategies. And we have a well-oiled machine there, doing investments and acquisitions of big numbers. I think I sort of touched on this a little bit, but just to give some numbers, we've worked with about 10 Indian companies so far through Start Path, 2 of which we went on to invest in. But frankly, investments is not our only goal. It's really to drive commercial partnerships. We launched our Indian investment fund mid-time last year. We've got 2 active investments and 3 in the pipeline. And then, like I mentioned, the corporate development engine. So often I think folks ask sort of what spaces are we interested in, right? And people kind of bucket MasterCard to say, you guys are a payments company and that's all you do. And I want to sort of correct that and say over the years, we've actively sort of built our capabilities on a lot of the before and after of a payment, but also with not just traditional retail payments, but other payment flows as well. And so I'll give you a flavor at least where we see a lot of interesting opportunity and growth. Commerce everywhere, so whether you're getting onto a train, you're in a cab, you're on a browser, you're on a phone, acceptance for us of commerce is a pretty big and important theme. It helps grow our network, and so we want to be there in every situation that you may want to transact. All payment flows and value-added services. So like I mentioned, probably in the last couple of years, we've been actively building our capabilities around account-to-account payments. So not just sort of card rails, but also ACH rails. We look at using those for a B2B flow, business-to-business payments, a P2P flow. And some of the interesting, when I say vast, that's sort of the technology that sits around it to make it a really valuable proposition. Open banking, obviously a big theme for this discussion and conference, but we are looking, especially in Europe and other markets, when regulation gets ready, on how do we partner and support the open banking infrastructure. Data analytics and services. In India, this is obviously an important theme as we go beyond Tier 1 and Tier 2 into SMEs and financial inclusion. And then safety, security, and authentication. And we see a really big role that MasterCard could play in helping consumers understand the risks of security and identity, and also help support that ecosystem. We've got a pretty wide and growing network. It's a lot of dots, but really these are a mix of companies like banks and corporations and merchants, as well as a lot of investors, VCs, PEs, and accelerators across the globe, and we're actively looking to grow this footprint. So if we haven't engaged before or we haven't talked, please would love to sort of start that dialogue. And so that's sort of my ending message here is we are open to engage. I want to sort of drive home the point that we look at partnerships first. Investments for us are really a glue to that business partnership. We're not a financial investor. We look to co-invest with our financial investors. And really what we're trying to do is create differentiation. We want to sort of have a value creation mindset together. And the last sort of advice here is kind of finding your champions inside MasterCard. And there are many more folks like me on the corporate development or on sort of MasterCard Labs who can help you find those champions. So I'll just quickly give my email out as well as our website and where folks can apply to StartPath. Do reach out. Any questions, I'm happy to sort of be your point person and gateway into finding the right home inside MasterCard. And before we end, just a quote that we, I think, constantly talk about inside MasterCard, but the future is unwritten. Those that adapt and embrace change will win. Those that don't, won't. Thank you.
Thank you so much, Mohit. So I hope that everyone is following our updates from our social wall. And once again, I'm going to remind you the hashtag is ZetaVera, and you know the link. And also keep your questions coming in on slido.com as well. See, that's the wall. We've had a lot of people actually giving us their comments and suggestions. And don't forget your questions as well. The code to use, of course, is Zeta. So if you have more questions, we have one more panel discussion coming. So keep the questions coming as well. So next up, ladies and gentlemen, we have Arvind Ronta, Head of Products India and Southeast Asia Visa. Arvind is known to bring entrepreneurial enthusiasm to his team, and his colleagues describe him as a strategic thinker and one of the best out-of-the-box problem solvers. So please give a big round of applause to Arvind Ronta.
All right. Hey, everyone. So, when Bhavin and Murli invited me to speak at this event, so there were 2 interesting challenges for the team. One is, what could we tell fintechs that they didn't already know about, right? So that's all of you, right? Second was, what is something that we would announce here with 100 plus of you in this room that we have not announced yet? So that made it easy, right? So democratizing banking can't happen until you empower the fintechs. So that's the topic of the presentation that I'm going to talk about. And if you ignore all of that, and I also want to just hold your interest till the end when I'll talk about an announcement. This is the first time you'll hear about this right here, right now, that no one has heard about it. Right? So let's get on with this. Visa's vision, most of you know Visa, we're a global network. This vision is something we hold very dear to our hearts. Whether it's a product or a strategy when we are thinking about our partners, we want to be the best way to pay or be paid anywhere and everywhere. And for everyone and everyone, right, across the globe. We are the largest interoperable and most modular network. If you look at some of the scale that we have achieved over the last 60 years, more than 16,000 financial institutions issued 3.3 billion Visa credentials, which are accepted at nearly 50 million acceptance points. The scale and the network we have created with our partners is just gigantic, right? It's huge. And that's part of the network where we are bringing our banks, merchants, and consumers together. And a lot of you are enabling this network, and I'll talk about that in a bit. When we talk about India, it's a huge cash displacement opportunity for us, right? So it's a $1 trillion cash displacement opportunity. It's massive, and it's untapped. And it's untapped because you have close to 1 billion cards, around 850 million debit cards, and roughly around 50 million credit cards. And you have around 4.5 million of acceptance points. It has the infrastructure on the issuance side. There are some growing pains on the acceptance side, but if you look at and double-click on some of this infrastructure challenges, we have huge debit penetration, but the activation remains a challenge. Not many people who are getting debit cards are using debit at point of sale. They keep using these cards as ATM. That's a challenge when you're trying to digitize payments. If you look at credit, we have a different challenge. We have less penetration, but those people who use credit cards, they activate it pretty much close to 50% of those are activated cards within first 30 days. You think of POS penetration or point of sale penetration, that's lowest amongst all the countries where digital payments are accepted. This is such a huge challenge. The penetration is abysmally low. So in this backdrop, when you look at the target that the government has thrown at the industry, this Mission 2020, which is METI's target for 40 billion transactions in a year, this year, in 2020. We see that's a tough challenge, not hard to achieve, but there has to be enablers. And we see these as 5 enablers, right? One is the cards we talked about, which are being issued but are not active. How do you activate them? And just to give you some point of comparison, there are 0.6 transactions per card per month in India. That compares to 11 transactions per card per month in Australia. So that just gives you a benchmark of what maturity in digitization on cards could look like. Then you think of acceptance infrastructure. We have around 60 million merchants out there in physical world, and only 4.5 million acceptance points. That's again very low. So the question is, okay, how do you digitize smaller merchants and really accelerate the digitization curve? The third challenge is credit access and affordability. There are 200 million credit-worthy customers, but only 50 million cards have been issued. How do you tap into this massive credit opportunity and get more credit cards or credit credentials to credit-worthy customer? And then finally, experiences. I don't know how many folks know here, but if you are an e-com merchant, your biggest problem is payment success rate. That's in the range of 75 to 80% that most large e-com merchants are right now trending at. And of course, this is something which is a topic when we talk to our partners at Amazon or Flipkart, they want us to solve for this. More payment success rates means more transactions. more commerce. Then the fifth enabler is really interesting, right? This is you. This is how do we get the fintech partnerships going, because the first four enablers are not going to take off if the fifth enabler, which is a fintech or partnerships, aren't taking off. So in the backdrop of this fintech and the importance of fintech, so here's a quote from our CEO, Al, and it says it very clearly, like in the last few years, we have been trying to think and act differently. And we are finding new ways to engage with fintechs. Now, we are not the best when it came to speed, nimbleness, a few years ago. But you'll see, I'll talk through it a bit on the journey we've had in India, in the world, where we are actively reaching out to fintechs to make you and other companies like yours be part of the network. So that's a priority. That's a priority for our CEO. That's a priority for us and the leadership team in India. But the question is, okay, what do Indian fintechs need from a company like Visa, right? So here's the challenge. If you're a fintech trying to figure out what you want to do in payments, I think Bhavin talked about in his presentation some of the challenges that exist. Here are a few of them that we have directly heard from the fintechs that we deal with. How do you cut through the complexity of payments and regulation? You just want to do a great job with your customer, but you have these, loads of regulation. You don't know where to start your payments acceptance and how to even go about applying for a merchant account. These are real challenges for a small startup. How can you go from a stealth mode to a wealth mode? Right? Like there was a time when you had to run an operation in stealth mode. Now you are trying to figure out how do you stand apart from the competition? How do you get that scale quickly? Super important. And not just getting scale quickly, but how do you get it rapidly and reliably? Right? You don't want to get a scale 1 month and fall back next month vis-a-vis your competition. More importantly, how do you tailor your payment solution? So you have a use case. How do you tailor the payment stack that the networks or the banks are offering you to deliver on your use case? And then how do you take what you have built in India and fine-tune that to other markets worldwide? Who's going to guide you? Who's going to mentor you? What is relevant in India? How do you apply that learning, that stack, to other markets globally? And then, I think this is one I really like. How do you reduce the date or the period from what you have today and when you can ship fast? Right? So it's speed of execution is really important. So here's Visa's proposition. It's pretty simple. Just like our mission, we believe we want to be where you are and help you get there where you want to, right? And this is what we've been doing for the last 60 years. We've been connecting our merchants, financial institutions, and consumers worldwide. With the rise of digital commerce, we've started adding technology providers to our broader network, right? So it wasn't enough to just have banks or merchants. What came in through digital commerce was all the digital partners, digital merchants, whether it's Amazon or Disney or Uber, they became part of the network. And it was important for us to expand the network. And it's still going on. We continue to evolve and expand the network. And the beauty of the network is the more the participants, the richer the network. And the richer everyone gets to benefit through more innovation in the partnerships. So this is where we want to go. We want to leverage our experience in payments to help you get started, start accepting payments. We want to be able to lend you the power of brand Visa when you're thinking of expanding globally, when you want to stand apart from your competition. We have one of the largest networks in the world. By being a network participant, you get access to that network. We have been working with a lot of you here in Bangalore, in Delhi, in Mumbai, to how do we cater what you have built in India to help you expand globally in different markets and tailor for those markets as well. And then we have massive amount of data. Right, I just shared with you, we're running We have 16,000 financial institutions worldwide. We run 65,000 transactions per second. So there's a massive amount of data that we can provide insights to your business, how your consumers are doing. Hopefully useful to you. And then finally, how do you get quickly set up with Visa? And this is a big part for us. And how can we be more nimble, efficient, and get you started on payments in Visa? So this has been our journey so far. And I want to just touch on these key milestones. In 2016, we introduced Visa Developer Platform in India. So what was that? So it's basically, think of a storehouse of all APIs that Visa has enabled to partners, fintech partners, literally. We have opened up VisaNet, our core Visa infrastructure, and built API layers around it to enable multiple use cases. It could be around geofencing. It could be around transaction controls. It could be around ATM locators that you want to share with your customers, and you want to use these bunch of APIs. So essentially what we did is we made it easy for fintechs to use our infrastructure. Then in 2017, we said, well, we have a lot of fintechs who are working with us in India, but they also want to grow beyond India. The point Kunal was making. Once you have achieved your MAU here, then you want to figure out how do you gain more ARPU outside of India. So it's something that we see a lot of fintechs want to grow beyond India. That's Visa Ready program for. It gives you visibility. It allows your solution to be certified with Visa, which can then be extended globally to all our partners. Super important when you're trying to establish a brand outside of India. And then finally, last year, our team started FinTech Fast Track. It's a way in which we onboard you as a Visa partner, not in 18 months, the challenge that Bhavin was throwing at the industry, which is very slow, but in 2 to 3 months. We can get you up and running, give some startup incentives, plans that we have to get you started, give some fee rebates to make it easy for you to start getting on Visa Network. And then, more importantly, give you more mentorship and give you expertise and support you need as a fintech to grow in payments. This is an example of Neo, one of the startups most of you might know. They've launched a global card for travelers with Visa as a network brand. And essentially, they were a perfect fintech case study for us because they leveraged every part of the programs that we have for fintech. They started playing around with Sandbox in Visa Developer Platform. When they found it was interesting, they went through the Visa FinTech Fast Track program, and we got into a agreement or contractual agreement with them, through which they have now started to leverage the strength of Visa Ready program, and with plans to go global eventually. These are just some examples on how they leveraged Visa APIs to enhance the experience for their customers. So if you're traveling abroad, one of the most important things you need is real-time notifications. You want more transaction controls for more security. Security is number one, besides, of course, the Forex rate you are getting. Security is one of the reasons most people use or do not use a card when they're traveling. Contextual offers, travel advisory tools to find your nearby ATMs, all of those suites, they didn't have to build anything unique for a bank. We had that as part of the network. And that's kind of the power of the APIs that we are lending to fintechs. But here is the thing I want to introduce, right? So this is the thing we are introducing here. It's not been talked about this at any event before. That's the Visa Everywhere initiative, guys. This is a fintech outreach program for smaller fintechs out there who can work on big challenges that I'm going to talk about and participate in awards totaling up to 50 lakhs Indian rupees. And I just want to give a quick demo on what this program is about, and then I'll talk about it. Can we play the video?
You're a startup with an idea that you think can change the world. But how do you make it grow? Enabling commerce at global scale, or simply transforming the way someone pays for a cup of tea? Innovative solutions for problems large and small can come from anyone, anywhere. And that's why we developed the Visa Everywhere initiative. a program designed for startups to pitch their solutions to today's commerce and payments challenges in front of Visa executives and our clients. First launching in the United States in 2015, the Visa Everywhere initiative has witnessed explosive growth of active pilot projects. Through this program, startups can receive mentorship, exposure, resources, and the support of a global payments company. From solving challenges like creating next-gen artificial intelligence and voice solutions, expanding digital access for small businesses, harnessing big data, or developing new ways to engage and educate customers, the Visa Everywhere initiative seeks innovative ideas from all over the world. Apply now to the Visa Everywhere initiative today for the chance to see your solution in the spotlight, making the world a little brighter for everyone, everywhere.
Awesome. Thank you. So just a couple of highlights. 6,000 plus startups have benefited from this program worldwide. We have done around 27, and 3 are in progress as I speak. So in total, there are 30 of such programs that have been done globally. There's been total of $2.5 billion of capital raised by fintechs who've participated in this program. And there are roughly around 215 finalists and 100 winners till date. And in India, we are going with the tagline for inspiring Indian fintechs. And it was important that we just don't take what we invented in the US and just slap it into India. So we have really customized this journey for fintechs in India. So if you look at this outreach is going to start on 2nd of December with Mumbai fintechs. And there's a period of registration when these fintechs are registering on a portal. That closes by 25th of December. So between now and 25th of December, we are planning to cover these 5 cities between Mumbai, Gurgaon, Bangalore, Hyderabad, and Sambalpur in Odisha. That's the outreach. Once that's done, we will engage with these fintechs, provide them the mentorship, the tools, access to APIs that they need in the sandbox environment to build prototypes around a set of challenge statements that we have given to them. We come back to these 4 cities, again, to hear their pitch, and we'll shortlist 10 of these guys to come to the finale, which would be a final pitch that would choose the winner for the winning amount of close to 35 lakhs. These are the 3 challenge statements we are giving. Some of the very similar theme we talked earlier in the panel and Bhavin's presentation: digital issuance, quick access to credit, and just not payments, driving small merchant acceptance growth. This is a real problem in India. The long tail of merchants still needs to be brought into payments and digitization. And then finally, transforming our B2B value chain and digitizing it. These are real problem statements that we picked basis the big problems that India has today, and we're going to have these fintechs really use the brain power and put some effort on solving for this, and the best who solves for it wins the grand award of 35 lakhs and a challenger winner for each category for totaling up to 14 lakhs. So I really invite you to participate. Check out the portal. If you scan this, you'll see more about this program. That's all, guys. That's the way, I think, in which Visa is trying to empower more fintechs like yourself. And I really invite you to participate. Thank you.
Thank you so much, Arvind. Let's give him another big round of applause, ladies and gentlemen. Well, we've heard the fintech founders and their perspective. So are you ready to hear the VC side of the story, ladies and gentlemen? Yes? Yes? Okay, so bringing on stage our second panel, who will talk about, should fintech firms pursue market share or revenue? Now, I'd once again like to call on our esteemed moderator, Bhavin. Can we have you on stage as we get set for the second panel? Thanks, Bhavin. And to our audience, don't forget that we really, really want to know what you think, and we want your questions as well. So I would suggest that you keep slido.com ready, have those questions coming in as and when a thought comes to mind, and we'll try to have those questions addressed for you at the end of this panel. So joining Bhavin on stage is someone who leads with the thought, if you believe in the company that you've invested in, then the ebbs and the flows will pass. Well, don't we all need that? So please welcome Mridul Arora, Managing Director, SAIF Partners. Can we give him a big round of applause? Welcome, Mridul. Our next speaker is often known to share a piece of advice. Don't stress over daily challenges. Popularly known as GV, he took a chance at life when he quit his consulting job. So please put your hands together for GV Ravi Shankar, Managing Director of Sequoia Capital India Advisors. Welcome, GV. Thanks for joining us. So if you want to know what is the best way to reach your top investor choices, you must reach out to our next panelist, Abhinav Chaturvedi, partner at Excel. So here's welcoming Abhinav on stage. Can we give him a big hand? And with that, here is your panel, ladies and gentlemen. So Bhavin, over to you.
Thank you. Awesome. So this is, again, a second exciting panel. Thank you, guys. Again, really humbled and huge respect to what you folks have done in the Indian sort of tech startup ecosystem. Why don't we start out with sort of my first question from my side for the panelists, basically, would be just to sort of give a quick introduction to yourself and the firm and your thesis, and more importantly, what your firm is doing in the fintech space in India or globally, basically. Why don't we start with you, Abhinav? Sir?
Okay, sure. So quickly, my name is Abhinav, part of Excel. We are a venture capital fund. What that means is we invest in companies at very early stages and partner with the company across the growth journey and help them across various stages. We have been in India for the last decade. Globally, we've been there for the last 35 years. Some of the notable companies we have invested in are Flipkart, Freshworks, Swiggy, Urban Clap, and so on. On the fintech side, which is like an important focus area for us, we would have done more than 10 deals, invested more than $100 million in this space. Notable investments in this space would be Acco, where I have Mridul as partner on the board there, which is in the insurance space. Then in the lending space, the important companies in our portfolio would be Samunati, Rupeek, which is with GV in Sequoia. Drip Capital, again, we have Sequoia as partners. And then we have, another important area of focus, which is investment side, where we invested in a company called Scriptbox. So would love to talk more and get more questions later. GV?
Yeah, hi, my name is GV Ravi Shankar. I'm a partner at Sequoia Capital. We've been in India since early 2006, so it's about 13 and a half years. And overall, we've been around for about 47 years. In India, we invest across sectors: technology, consumer, healthcare, and financial services. Financial services is a pretty large part of what we do. We invested over $500 million in India in financial services, and in over 40 companies. We've had 3 IPOs, SKS, Ujjivan, Equitas, and we had 4 M&A exits, so kind of seen the journey through the times. And we wouldn't call ourselves fintech investors, we're financial services investors. We do both fintech and financial services. I mean, clearly fintech is now the buzzword, but I think of everything as financial services. So, that's a pretty active theme for us across payments, lending, insurance distribution, and payment infrastructure overall. So that we've done several investments in the space. And Abhinav spoke about some of the companies. There's too many of them to list, but in the lending space, we have companies like Aptus, 5-Star, India Shelter. We are pretty big into the inclusion theme. In the financial infrastructure space, we have Pine Labs. We used to be shareholders in Citrus Payments, Prism, and so on, Razorpay more recently. And in insurance, we were investors in Star Health, and in the last couple of years, we're an insurance distribution company called Turtlemint. So that gives you a flavor of the set of things we do.
Sure, thanks. Hi, my name is Mridul. I work with SAIF Partners. We've been investing in India for almost 2 decades now. Much like GV, we like to think of financial services overall as a big theme for us. So financial services and consumer are 2 sectors that we invest a lot of money in. We are currently investing out of our 6th fund, manage about $5 billion in India now. And some of the marquee investments that hopefully you all have heard of include Make My Trip, Swiggy, in the fintech space, Paytm. Much like GV, we would have done more than a dozen investments in financial services. So before our good friend Nitin made broking sexy, we invested in a company called ILNFS Investmart, which was one of the first retail brokers in India, which then got sold to HSBC. We are also shareholders in the largest stock exchange in India, which is National Stock Exchange, which is as fintech as it gets in the financial services side. And then on the more new age side, as I said, we are in Paytm, with Axel in ACO, which is an insurance manufacturer, with GV again in Capital Float, which is a digital lender, in ClearTax, which is the largest tax filing platform in India today. A couple of more fintech SME lenders, including a company called iFinance, based out of northern part of India, and continue to be very, very excited about this space overall, irrespective of the last 12 months and the mood you see in Bombay, and we can talk much more about it as we go along on some of the questions Bhavin has.
Well, thank you guys. That was amazing. Yeah, and between you guys, I mean, you seem to in many ways have created sort of the landscape of fintech in India. Wanted to sort of now quickly jump on to kind of the next topic, which is most of the audience here today are in some form fintech founders at kind of various stages. Be useful to share your perspective on, what are you looking for in a fintech company and a fintech founder when you're evaluating it from the perspective of your respective firms as a good potential investment. And I know this can pan across different stages, so feel free to talk about, whichever stages you'd like to talk about. But yeah, that's something to shed perspective on. We can start with you, Mridul, this time.
Sure. I wish I had, a template to find a founder to back, and then life will be very easy. The good and great thing about this business is, there are different ways and means to find them. And I'll contrast this with a few examples. On one side, when we funded iFinance, they just started out with one branch, but here was a banker who's 50 years old, who's actually worked in the industry for 25 years and wants to start a startup and wants to just raise $1 million. And I think it crosses all the boxes of traditional VC investing. You'd say, young and hungry founder who would be raring to go for 20 years, should have built out a great product, tech team, should have a vision for where this will be 10 years hence. But there is someone who's lending to a small micro market in Delhi to essentially people who are building leather shoes, right? But there was something special there because he brought to table insights from 20 years of his work in financial services and a very specialized approach to lending to SMEs in India, which seems to be a biggest contributor to GDP in India. So to me, on one side, in fintech, fin is as important, if not more, as tech. And therefore, one lens I look for is what's the unique insight or what's our unfair right to win in the market. And a lot of that comes from domain expertise. On the other hand, you would always find outsiders who will come in and who would have observed or had some accidents with the industry, would have left an indelible sort of impression on them, and they come with an insight. So ClearTax to me is the other example where Archis is your quintessential, IIT Guwahati, computer science engineer, went to US, worked in product startups, but comes from a CA family and has always seen tax filing in India as a very, very painful process, and just came with one simple insight, which is how do I do consumer tax filing and how do I make it very simple. But that's just a blot on paper, right? It keeps expanding, and now it spans across GST, spans across enterprise, spans across multiple compliance functions. And to me, therefore, he's someone who comes with a very unique product experience and product lens to a problem which is as old as humankind, which is taxes. It's always said death and taxes, and kind of comes and solves it in a new age way. So at least for us, there's no real template. We are predominantly early stage investors. It's obviously a perspective on industry or an idea, but it's people and what unique insight and unfair right to win they bring to the table. They can be very traditional or they can be very new age, but it's more about bottoms up understanding what they're trying to solve and why.
Yeah, I think Mridul answered for most of us in this group. We all have a variety of founders that we back. Your example is iFinance. I'll give you my example on Aptus. Founder's name was Anandan. He started the business in his 60s. He was actually retired, and he was serving on boards, and he was chairman of a couple of companies. Then he realized that people are just, making businesses in a short period of time. He has been doing this for, decades. And he said, why don't I start a company again? I know I'm retired, my children are married, gone to the US, whatever, like I'm free. What am I going to do next? So we started a company called Aptus, and today it's one of the finest and best run housing finance companies. And we were late to the party, but we are thankful to be shareholders to him. That's an example of Prism Payments, where Loney Anthony was completely grey when he started the business. I remember this interaction with the US partners came and say, we back 20-somethings, Google, like, what is this guy? Like, this guy 50 years old, you guys are backing this guy. And, he just went on to build a tremendous business which got sold to Hitachi. So, I think of businesses in the following buckets, right, broadly, I'm just kind of making it up. But, there are businesses that give away money, there are businesses that take money, and then there are these infrastructure type businesses where you're working with banks and institutions right now. In the situation where you're working with banks and institutions, you actually have to have some experience, some expertise, some background and connects to build a business. It's not easy for a 20-something to go stand in front of State Bank of India and say, okay, why don't you give me this contact? It doesn't often happen that they go with you. These are, large institutions move slowly. They need to see some trust, right? And then the businesses where you give money, the giving money also I feel needs more experience than otherwise, right? So it's very easy to give money, but, quite hard to collect it and get it all back and make your money. So I feel like people that have done it have seen that journey and approach it with finance knowledge first versus tech first, have a better chance of success there. And in the bucket where you take money, which is, if you're doing wealth management or things like that, where you're looking to reduce the friction in making them adopt something, or insurance, you're selling insurance. These are things where you're taking money. So there, the customer experience, how easy it is to do, it requires a different thinking, which some of the younger founders do a better job of. So I'd say somewhat of a mix. So you look at different situations, say what's applicable to that situation.
Yeah, I kind of concur with both Mridul and GV. I think the founders that have worked for us all had domain experience in the financial services space, and therefore most of them were slightly on the older side. And the founders who did not have domain experience had to hire people in the team at senior levels who had domain experience. And we, at least in our portfolio, there is no exception to that rule. In terms of, your question was more founders as well as what kind of, what we look in a company. I'll just maybe throw some more light on that. So if I bucketize our side of companies, I would say, there are three things, or, largely, if there's a differentiated product, you're trying to sell in the market, maybe insurance is like a great example where, things been around for a long time. There's not been much product innovation in that market. And therefore, if there is a play to differentiate the product and sell a much better product, which suits the customer needs, maybe, that's something unique, and, that's something we like. Second, new distribution channels because of various things that are evolving. Maybe it's tech, maybe it's mobile. So maybe that's the second sort of, we see. And if that distribution advantage is sort of long lasting and not like ephemeral. And third, a lot of, companies, at least in the financial service space, are for a set of consumers or customers who are not served or underserved in some sense. So is there like a set of customers that have now come to life because you found like a new channel to get to them faster with a nice product? And it can be sort of a combination of all these three things, but it has to be something more differentiated and a unique insight, which typically has come from your banking experience. So for instance, like we are invested in this company called Samuniti Finance, where the founders started as a clerk in a Canara bank in 1980s. And grew through the ranks to become like head of IFMR and so on, and started a company in the rural financing space. And he spent like 25, 30 years just thinking about this one thing, how to solve this problem, right? So it's just very hard for like somebody who's just new to this problem and solve this problem right off the bat, because it's not just a very defined problem. You need to know the ecosystem much, much more better to be able to figure out how to solve the problem.
Thank you, guys. That was, pretty good insight into kind of the different, well, not really templates, as you said, but perspectives that span the kind of approaches that you look at with sort of the lens that you use for evaluating fintech founders. I'll actually take a question now from the audience, from the top questions that have been posted on Slido.com. And so, in fact, this was one of the questions in my list also, which is, according to you that's one of the advantages, I guess, of being a VC or a fund, etc. You get to see so many entrepreneurs and listen to so many ideas that gives you perspective that many of us potentially wouldn't be able to, get. And so, what according to the top 3 kind of white spaces, the top areas, if you will, in the fintech, techfin, financial services space in India that you think are relevant for sort of entrepreneurs to pursue? GB, why don't we start with you?
Yeah, I can pick one. I don't know if I can answer 3, but leave it to the others to answer.
Well, we have 3
That makes it hard. I'm going next.
Makes it easy, yeah.
So I'd say the one area we're interested in, it's still the early days. We made one investment in a company called Grow in the wealth management space. We feel like, historically, gold and real estate have been assets that have done, terrifically well for the Indian households. So, kind of there's a reason why people think of these things first, like, you want to, buy a home and then get married and so on. It's almost an investment that everybody wants to have. But, if you look at the last 10 or 15 years, this notion has changed because investment returns on these categories have not been very high. And, people are also understanding and appreciating the cost of managing some of these things. So we think of financial markets and participation in financial markets as a pretty large theme. And it's been playing out. It's not a new theme. But for people to participate in any meaningful way and to do it without having to apply a whole lot of logic and thinking is important. So companies like Scriptbox and Grow and others are kind of trying to do this, and helping them make this transition from physical assets to financial markets. And we think that's an area where there is a whole lot more to be done. And we're still kind of scratching the surface, and it's probably mostly the urban audience that understands something about the stock market that's even participating. But there's just so much to go, so much innovation that can come there to help people make better investment decisions and manage their wealth.
Yeah, I think so. Largely, sort of, if you look at financial services space, so there's lending, insurance, there's wealth management, which we talked about. Maybe I can go for lending and leave nothing for others. So maybe in lending, typically the companies they pick up a vertical which is sort of not really solved well, and you have some unique insight about that vertical and solve that problem fully. I'll give you an example. So for instance, we are investors in a company called Drip Capital, which provides trade finance solutions to exporters in emerging markets. And they started in India, and they're expanding to other emerging economies like Mexico and Indonesia and so on. Largely the problem was that today these small and medium-sized exporters don't really have access to credit from the banks. In case they have access to credit, the amount of credit they get is not sufficient for them to actually, run their business well. And so here's Drip Capital. They started this thing there. They can raise capital in the U.S. markets and provide capital to these small and medium-sized exporters in India, which apparently sort of comprise of 2/3 of the Indian export market. And in Indian market, the banks would underwrite the exporter for some reason. And would want like personal guarantees from the exporters, again for some reason, to lend to them. And ideally, when you're doing a trade finance, it's basically underwriting the buyer in the say the U.S. market or something. And unfortunately, that was not done. So these founders had the unique insight to come up with a solution where they can raise capital in the U.S. market, provide debt capital in the Indian markets, and actually underwrite the importer in the U.S. Right? So if you pick up these spaces where sort of, for instance, there'll be two-wheeler financing, there can be healthcare financing, there can be education financing and so on. So there has to be, all these spaces are fairly large, and the founder would have to understand sort of, what's broken in each of these spaces and how to build these businesses. And I think the entire lending space, if you just pick one or two spaces, each of these can be like very, very large companies.
Great, there goes two of my top ideas. And both of them I missed investing in, so there's the portfolio. I think, to me, there are three themes or broader themes I'll highlight, and maybe an idea each, which is I think you either solve for, and in some sense GV Abhinav said that, you either solve for access, which is you either unlock a new product to monetize, which was like gold loans in the era, or you unlock a new segment to lend to, which was at some point of time down south, the triangle of Chola, Scarf, and Shriram and Sundaram doing CV financing, which no one would touch, right? So, and there are many new age ways to unlock access. So I think India is, the biggest opportunity is unlocking access. So I think supply chains are very interesting there. I think whether it's global supply chain and trade finance or whether domestic supply chain, I think it's also helpful now that we have GST and consolidation of supply chains. So that's something that interests me a lot. We just invested in a company called Cashflow, which is solving this for domestic supply chains. And more as companies grow, supply chains get organized. I think it is just inevitable that credit, which used to be one of the roles supply chain used to play, has to get unbundled. And you have to move movement of goods and movement of finances separately. So I think that's a theme for someone to play on. Maybe there's a platform and a software play there, and maybe there's a lending play there. I think too, there are just some verticals in India which are staring you in the face and which are completely undercapitalized. So education and healthcare being two, that really intrigued me. We just funded a company called FinWeGo, which is working with schools in tier 2, tier 3 cities. They start out with teacher loans, then lending to the school ecosystem. And the shocking stat to me at least was that teachers in tier 2, tier 3 schools today are paid less than the drivers in Bangalore. Yeah. And I think that's just a segment that deserves better financial access. I think the second set of opportunities are coming on the efficiency side, where you say, okay, let me use technology now to make things efficient. Much more of what Bhavin spoke about, what would happen on B2B payment side. I think that's an area that is very interesting. Both as compliances increase, people move money through formal channels. I think B2B payments is a large opportunity set, which I feel excited about. And to me, the last bit is experience, which I think has always been deprioritized in India because it's been more about let's solve for access and provide things as you can. But I think we are now living in a day and age where everyone slices India into these three Bharat, India, and the top 20, 30 million population. I think there are very credible businesses being built to solve for experience, be it on the consumer side or be it on the SME side. I mean, one analogy an analyst in my team uses always is that all business owners are now used to WhatsApp and Paytm. And why should they not have a software to use for their business management? I mean, we have to move beyond what they currently use. So that's just a flavor of few things that excite at least me personally right now.
Awesome, yeah, Mridul, and I couldn't agree more. I mean, those Zeta, we build platforms that can be used for retail and commercial use cases, so by companies, end users, etc., of banks and financial institutions. One of the things that we've found historically is when we talk to any player in the corporate ecosystem about payments, whether it's the CFO, the accounts team, the HR, the employees, if there is any payment process in the organization, everybody universally hates it. There is nobody who loves it. There's nobody who's neutral towards it. They hate the process. Whether it's reimbursements, salary disbursements, benefits, any corporate payment processes, costs, delays, paperwork, etc. It's frustrating for most people. And to me, I mean, I've always believed frustration is the genesis of entrepreneurship. So to me, there's tremendous number of opportunities available in those spaces to be able to resolve those frustrations through digitization, and completely agree with sort of all of you on the panel. Let me actually switch gears to the question that we kind of started the panel with. Would love to get you guys' perspective on that, which is, so should fintech companies and companies that you work with, I guess, what's your philosophy? Should they pursue market share or profitability? This is a topic that's dear to my heart also. Are they really mutually exclusive at all or not? Are there different stages of the company where you would think about it differently? Is it different for B2B versus B2C plays? Would love to hear your flavors on it, respectively. And Mridul, let's start with you this time.
All right. Okay.
So that you don't complain about the fact that you took away all the good answers.
Most tricky answer. So I read something on Twitter recently which said that either you die a startup or you last long enough to become a fintech. And I think in India, you don't even have to say fintech. You have to say live long enough to start lending. So we have a very polarized market. I read yesterday Google's launched checking accounts. Facebook has payments. Amazon has whatever it has going on payments, and everything else financial services. They lend to their vendors so much. So I right now, at least in India context, I think we are in this very polarized world. I think we have these distribution islands which are being built, and they're just kind of trying to ring fence everything around them. I don't even think it's a market share or a revenue game. It's much more how do I retain my distribution edge and how do I cross-sell to them. And I think, whether it's Paytm, whether it's, Flipkart, PhonePe, Walmart, whether it's Amazon, whether it's much larger like Ola, launch credit card and stuff like that. So I think to me, financial services has always been a great monetization lever. So I find in India context, everyone trying to do it both for engagement and revenues, if I was to take a stance. I think also at the end of the day, we're talking about a country where penetration is nothing. I think market share in this market means nothing. I think as long as you have a product and an insight that works, it is a business which has been built to give money to generate money or to take money to generate money. And I think the heart of it, it has to have a revenue model. You can argue that there are some pockets within fintech because that's obviously a very wide umbrella term. Payments, for example, is a very network, winner-take-all business, especially on the consumer side. And you would argue that there's a long journey to create this distribution island you've created, and then after that you start monetizing. And those journeys are in some sense the reasons, three of us exist, because, if companies had it very clear from the beginning, they wouldn't need growth capital. So to the extent that you're investing in building something valuable which has network effects, of course, go and get market share. But I think fundamentally financial services business is about doing sensible, logical things with a unique insight, unlocking access to segments not catered to. That does not necessarily mean you don't have a revenue model. And I think the market's so large that, frankly, if you ask me of my portfolio, I don't even know the market share of any one of them. It's just an ocean out there.
Yeah, I mean, you're talking about, at least in the lending space, demand is infinite, right? And there is really, there's no winner-take-all nature at all. And the market is so large that, for one person to do it is almost next to impossible. So, you would say in those kinds of segments, there's no point trying to build distribution without monetization. And only very, very few pockets, like Ridul rightly mentioned. I think if you're a platform, if you're a payment network, if you're someone who's just building to dominate, and then, you could take a view that, look, we don't have to monetize early on, and once I have sticky customers and distribution, then I'll monetize later. But for most parts, I'd say really, not even revenue, I think you need to find a profit.
Yeah, I think, just zooming out of fintech, I mean, typically going fast would you would go fast in a place where there's scarce commodity and you need to, get or capture that scarce commodity as fast as you can, because if you don't, then somebody else will. And, in financial services, unfortunately or fortunately, if you look at insurance, the market is like super large. Lending, the market is super large. In most of the consumer businesses also, actually, if online consumers are scarce commodity, then there has to be a product or some value proposition that you actually lock in the customer, because it doesn't mean that you get to the guy, but he leaves you after that. So in most cases, or most businesses, of course, there are places where you would need to go fast, but in most places, and mostly so in financial services, there has to be some kind of a business model and over time, a focus on profitability. And in financial services, the focus on profitability comes much, much sooner than other consumer businesses or other domestic consumption businesses. Primarily because, typically in lending you would be levered up, so you need to have some kind of addition to your net worth. And in insurance businesses, you will have solvency requirements. So if you just keep burning cash, then you need to keep raising capital, and what that means is you need to raise more money to fund that burn, and what that means is you'll keep getting diluted over time. So in at least in most of the financial service business, I would say focus on a clear business model and profitability sooner than later would be more prudent.
Thank you for that perspective. Yeah, I mean, I can sort of add one quick perspective to that. I mean, as an entrepreneur who's historically pretty much always only run bootstrapped or organically funded businesses, well, that's changed.
You don't agree with us, do you? No, you clearly like that.
But I mean, I talk about this also in a lot of talks that I sort of give to entrepreneurs, etc. That I think fundamentally every business plan comprises of, in my opinion, kind of 5 elements, which is who's the target persona, what's the problem you're trying to solve for them, how are you solving it 10x better than anything else that they're using to solve the problems, that's your product. What's your go-to-market strategy that can give you customers at a CAC that's lower than LTV eventually. What's your revenue plan now or in the future, depending on whether you're looking at distribution lock-in or starting off in the beginning. And then one thing that I also find actually revenue is also often neglected, but one thing that I also find often neglected is a moat. what is your business's moat such that you might make a very successful business with all the first 4 parameters, but how do you ensure that the next person with slightly more capital or a different strategy is not going to come away and take away your customers or your business plan, etc. And as long as those 5 fundamentals are, and you can't have 100% of all the answers of all 5 parameters the absolute beginning, but you should at least try and solve for them and validate them pretty early in the journey, as well as continue to sort of question them and validate them along the way. And that's the way I've thought of all of the businesses that I've been a part of myself. We'll take one last question from the audience out here on Slido. So how do you see the account aggregator sort of model that RBI has come up with? We've got kind of 5 licenses, I think, issued, shaping up in India. What are the kind of benefits you think it'll provide to kind of fintechs? Do you see it as the next UPI for India? Sort of, what do you think of the model? What do you think it serves? What do you think the benefits are?
I'm probably least familiar with this. I think it's super early. If I were to, kind of take this one level above, I think one thing, and there was another question, Bhavin, in the earlier preparation, like how is India FinTech different? I think the thing about India FinTech is you're in an environment where, the government is doing a lot to make access simplified for everyone to participate. Right? I think this is another effort and an initiative. So if you're able to kind of have these 4 or 5 guys with the licenses be able to assimilate our data and then share it with others. Now, we're still trying to figure out what is the business model for the aggregator because there's so many restrictions on what they can or cannot do. That part of it is less clear, but it is clearer that it can actually create and open up access for lots of fintech companies and startups, to kind of get access to data that is otherwise very hard to go and talk to banks and insurers, let's say, to kind of get access to. So to me, I think this is another step that there is kind of this ubiquitization of the infrastructure and access that the government is working on. So should certainly, help create a lot more innovative ideas in the market. At least that's the high level take. I don't specifically want to go into the account aggregator itself and who will build a business out of it. At least to me, it's a little bit unclear at this point.
Sure. No, I completely agree with GV. I think India, we live in this golden age where the government and the regulators build basic plumbing. And once you lay down these pipes, different things can ride on it. I think UPI by itself is not a business model. So this could be as big as UPI, I don't know. But I think this is, it just sparks a lot of ideas of how innovatively startups can use and make something which traditionally, banks have had this disproportionate right to win because they have your savings account and insight into balances. I think this just levels the playing field for a lot of innovation to happen. And I feel clearly that it's very early to say whether account aggregator is a business model, but what you can build on top of that, which is what we have seen massively being done on top of UPI, I think is very, very exciting. So I feel that's a space to watch out for. What do you do on top of it?
Yeah, similar points. I mean, it's just too early to say. We don't know what comes out of this. And while, Indian government is really sort of ahead of, most governments in the world in terms of, leveling the playing field on setting up the best payment infrastructure, account aggregators and other such initiatives. What that also means is there is, they also take away some kind of business opportunity from that, right? Like, otherwise you can have like a nice business who get like all the access to data and so on. But I think the future might have that if they level this playing field and provide these basic building blocks, there might be this real smart guy who comes up and figures out like, hey, we can build this new use case on top of this. But I don't know what that use case is, and we'll still wait and watch on that.
That's a valid point, right? So, I mean, we've been also closely watching this space in many ways, and there's, different countries looking at open banking in different ways. I mean, Mexico has kind of made it mandatory in some form to sort of introduce this new regulation. India is kind of going down this account aggregator path. I definitely believe, in fact, I would actually even say that it's good that the government's actually coming up with some of these sort of data access regulations because standardization will help as opposed to private companies coming up with their own then there'll be 5 companies with 5 different APIs and 5 different standards and doesn't...
It surely helps the consumer.
certainly doesn't, yeah, so standardization definitely helps. I mean, the way I see this question, how do I see kind of the account? To me, let's talk about the means to an end, right? Account aggregate as a model is essentially providing data. Data for just the sake of data is pointless. And so really what people do, and, to your respective points, what innovators and entrepreneurs and fintech founders in this, in this gathering do with that data is really critical. And I think typically when I've thought of data, both in my company and personal life. I mean, I'm a stickler for productivity, and I tend to do a lot of sort of personal measurement of lots of things too. But, to me, data is either to improve decisions or to improve efficiency. Those are really the two fundamental buckets in which I look at data. So, where are the areas in which you can build businesses that will leverage this data to improve efficiency or improve decisions? Decision could be, for instance, lending decisions. Can you use data of a customer to sort of make it, more effective for them to access cheaper loans, or enable businesses to see their data in meaningful ways to actually provide them business intelligence they can use in their daily businesses for working capital management or for different things of that. Banks, and I was talking about this earlier to somebody else, that, when banks got digitized, it's quite interesting. It wasn't even meaningful digital transformation. It was literally taking your paper statement that came to your house and almost pretty much copy-pasting it on the web as either a PDF or a statement. Even the merchant names don't make sense. Half the times you don't know what this transaction means. They've done nothing meaningful so far with that data to actually make intelligence available. So there's definitely opportunity out there in terms of how can you make more effective decisions through that data, and how can you sort of generate efficiency improvements through that data. And if you find for corporates, for SMBs, or for consumers, ways and means in which this data can be used to improve one or the other, then I think there's a fundamental business model out there that you can leverage. With that, I think I would take this opportunity once again to really thank our esteemed panel out here. Thank you for joining us, guys, and truly sort of answering all our questions. It was amazing. I'll pass things over to the team, and we have a quick sort of token of appreciation for our guests.
Thank you. Thanks so much.
So a big thank you once again to the panel. Can we give them a big round of applause? And I'm sure our audience is also waiting to network a little and have dinner. I think some people have already started outside, so we hate to be the ones to be between you and dinner. Can we have Bhavin and Ramki maybe come up on stage and share just a few closing remarks and end this on the right note?
So yeah, I won't take too long and won't stand between folks and dinner and drinks. I would love to sort of, ensure that everybody gets an adequate networking opportunity. This was amazing, guys. Thank you all for attending this amazing event. I mean, we were overwhelmed with the response and humbled, by the kind of audience. Loved the interaction, the questions. There's a, opportunity in this audience in many meaningful ways, given that we had, I think, about 150 sort of folks from different fintechs and founders, several individuals from networks and banks, to really meaningfully transform India's sort of fintech financial services landscape. All of you folks will be sort of an important part of that, and we're very, very happy and thankful that all of you could be here.
Likewise, I think thank you so much, everyone, for joining us today. Really appreciate the time that you've given us. And thank you so much for all the questions, especially on Fusion. I'm like, we really felt very glad that, okay, we could make sense with our product. So I think thank you so much for all those questions. And Mohit and Arvind, thank you so much for sharing what you guys have been doing for our fintech ecosystem. And Arvind, particularly, thank you for taking this stage as an opportunity to announce your Visa Everywhere program. And I think really appreciate all the participation from everyone. Thank you.
I also want to take this opportunity to thank our team, by the way, who's worked tirelessly, sort of amazing marketing team to put together this fabulous event. So a quick round of applause for every one of them. Yep. And please join us now in networking with everybody else. We're here to answer any further questions that you might have, as well as sort of join you guys in interacting with everyone.
Yeah, and we also have a stall to take you through the products of Zeta. Any questions, I'll be there. I'll be very happy to answer any specifics that you may have. Right. Thank you.
Awesome.
Thank you so much, Bhavin and Ramki. And thank you so much to our amazing audience, as Bhavin said, for being so interactive. Can we hear it once again for the entire team of Zeta for making this platform possible? Thanks once again. Please do stay on, join us for cocktails and dinner, and also head to the Experience Zone if you want to learn more about Fusion. This is myself, Paloma, saying thank you. Have a wonderful evening.